Hello everyone, how you guys doing? Just want to come with some quick news, guys, some quick stock news, and I want to thank everybody for tuning in to this show this morning, guys. As you know, our channel, if you're just joining us, follow a lot of the move that Jim Cramer makes. Most of the topic that we talk about is around Jim Cramer and the CNBC Investment Club. We still think it is one of the best places to get information. So if you haven't joined them, please consider joining the CNBC Investment Club. We also share some of the same information on our Patreon, guys. But we want to get right into it, guys, and we're going to start with Apple, guys. We know that Apple did report that the quarter was a really good quarter, and what Jim always say, own Apple, don't trade it, and you see the stock is around the 173 mark. So it's a stock that continued to do very, very well. Guys, as you know, I think Warren Buffett just released the earnings this morning. I think that should be on the CNBC.com. You could check that out. I myself haven't got a chance to look at it, but as we know how we feel about Apple, but at 173, I can't tell you to buy it right now. We always like to talk about stock that we buy on a pullback. We want to buy low and sell high. That's always the goal here. We don't want to get emotionally attached to anything, and we don't want to make bad buys, But as time go on, we will make some misses. Even as good as Jim Cramer is, sometimes he makes misses because nobody is perfect. Is a prediction as to what's going on. So just wanted to share that little nugget with you guys and let you know what I think about Apple. But we're going to talk about another stock, and it's a stock that, after listening to Jim Cramer, is a stock that he's saying don't buy, and I kind of agree with it. The thing here is that a couple weeks ago he was pushing the stock heavy, and then we see in like a retractment. So you have to be very, very careful. I am not in the stock. The stock has a lot of China play, and the stock is SD loaded. Let me pull up that stock right now for you, so you can see it here. We have seen the stock drop really, really low. It's at 203. That was like 250, 260. But early on last month, we have seen the stock was at 180 and it has rise up so much, guys. It's a stock that I am not in. It's a stock that does with a lot of skincare and makeup. I'm not in the stock because the money I have, I try to stick with stocks that give a lot of dividends, and this stock has not given any dividend right now. So I kind of stick with something that if the stock drop, I could get something back. So I'm not into that. I have a lot of other stock, but SD Lauder is not one of them, guys. So as he's saying, don't buy it now. They're supposed to report sometime next week, and Jim is saying that you should wait till the stock report, and I totally agree with that. So right now, it is a stock I would stay away from, guys. Moving forward is a stock I want to talk about. Caterpillar. It's a stock that I love. It's a stock that I believe in. It's a stock that I have, and it's a stock that I'm thinking about buying some more shares. I talked about that stock last week, and I continue talking about that stock because I believe in it. I'm really considering if I should buy some more in it right now because we always want to dollar cost average, where if we buy high and the stock drop to a certain amount, we want to buy some more, guys. But we got to be very, very careful here. It's a stock that we're not looking for immediate return. We're not traders. So what's going to happen? This is a 2 years, 3 years stock because once manufacturers come back and you see all the road work on this, they work on a lot of government contract, and it's a stock that buy American stuff. So Caterpillar is a stock I would definitely recommend, but I don't want you to buy this stock if you're looking to see a huge gain within the next 3 to 4 months. I would say no, it's not a stock that will give you that rise, but it's a stock that you want to hold long term, and it also have a great dividend. So here go the case to hold the stock long term, get some of that dividend, and within 2 to 3 years play, we expect the stock to do better. So it's a stock that we definitely wants to hold on to. It's another stock that could be a very, very, very good stock for you to buy. What I want to talk about, guys, now I want to talk about Disney a little bit. It's a stock that I have. I bought Disney around the 160. A little bit disappointed from since I bought it. The stock continued to drop. We know that the Disney did change CEO, so we decided that the best thing to do is to give them a chance. And we're not trying to sell nothing when it's down. So if you could hold on to your stock, man, I'm telling you, you cannot really follow every move that Jim make because they play with millions of dollars. But I know I can't. So sometimes I have to hold on to certain stock. But let me just pull up the chart of Disney here for you. Let me discuss Disney, guys. And I'm definitely gonna tell you what I think about Disney. So they're supposed to be reporting soon also. And as Jim said, we should wait for the quarter, see what happened. Although they did get an upgrade from Morgan Stanley, I say be very careful. I would not buy Disney here right now. But let me talk about a stock that I'm really itching to buy though. It's two stocks. So first I want to tell you about the stock that the CNBC Investment Club bought last Friday, and it's Morgan Stanley. So let me just pull up the chart of Morgan Stanley a little bit. It's a stock that I had. I sold it, made some money, and I haven't got back in because in my book, Wells Fargo is looking very attractive right now, guys. So Morgan Stanley, they also give approximately 4% dividend. It's a great stock, but if you look, it's a great stock to buy. And the CNBC Investment Club did buy some stocks. So if you want to follow some of the move that Jim Cramer make, that could be the stock for you guys. But the stock I'm really thinking about buying right now, if I'm going to take a new position right now, it's going to be Wells Fargo. And let me pull up the chart of Wells Fargo so I can explain to you why I will buy Wells Fargo right now. So as we can see, Wells Fargo is at $38.54 here. They still have a 3% dividend. I don't know how much more cheaper you could get to buy a stock like a company like Wells Fargo at around the $38. I'm definitely itching to buy that stock, and I'm considering if I'm going to buy any stock, it will be Wells Fargo, guys. Anyway, guys, if you're enjoying me and you're enjoying some of the information I give, please subscribe to my YouTube channel. I also encourage you to join the CNBC Investment Club, or you could join my Patreon in a 7-day free trial. See what I offer over there. But anyway, guys, I want to thank you for subscribing to my channel, and I'll see you tomorrow when we come with more stock news, or if the CNBC Investment Club make a trade, I will definitely come in and let you know once it's before I do the video. If not, we'll do it on the next day like we did here when we let you know that they bought Morgan Stanley. So if you want to follow some of the move that Jim Cramer make, please consider adding to Morgan Stanley or doing a new position. I'm definitely will sit down there, think about Wells Fargo. I say it's looking very attractive right now. If you're already joined my Patreon, guys, please stay tuned and follow all the messages I send and all the emails, and look out for another video by the end of the day. Anyway, guys, thanks for watching the video. Don't forget to subscribe to the channel.